Welcome to TheoTrade. This is Don Kaufman. Here we are. It's January 8th, 2018, doing the Theo Night video. Just about 18 minutes left in the trading day. The S&Ps are up some 4 points, but we're going to deviate away from maybe some of the day-to-day movement in the markets and talk about a much bigger and broader topic. That has a lot to do with something I've been focusing on quite a bit lately in chat, and that's this. There's a handful of individual underlyings that have become kind of the marquee, if you will, of individual index products. One of those happened to be the Dow, the other one, of course, the S&P, and the other primary index happens to be none other than the Nasdaq. Nevertheless, we're going to focus a little bit on the Dow first here and then move over to the S&Ps. And I just want to point out, first and foremost, the Dow is 30 underlyings. Okay, it's a good starting place. Most people are fairly familiar with that. But the Dow is not market capitalization weighted. The Dow uses what's termed the Dow Divisor. I'll make this fairly straightforward. What that ultimately amounts to is simply this. When a Dow stock moves up or down $1, it moves the Dow by X number of points. Now, X number of points is calculated ultimately by the Dow Divisor. Now, again, there's a reason I'm going through this, and this stuff is incredibly important. The Dow Divisor, okay, can change from time to time. But right now, okay, for every $1 move, and again, it doesn't matter what the underlying is. If the underlying moves basically $1, okay, higher or lower, it is the equivalency in terms of Dow points. It's just under about 7 Dow points, right? So a dollar move up or down equals, okay, plus or minus 7 Dow points. All right, and we'll just round that to 7. It's not perfect. Again, the Dow Divisor does change over time. So where do I ultimately go from here? Well, if you haven't looked at the Dow lately, you haven't seen, okay, what? The fact that there's a handful of underlyings driving the Dow. And again, if you haven't looked at the Dow lately, you haven't realized that the Dow itself is, I mean, how shall we say this? Nosebleed kind of levels. I mean, is that like fair terminology? And, you know, most of the time I do not pull up the Dow Jones Industrials. I usually pull up like the Dow Futures. In this particular case, though, let's go ahead and let's actually look at the $ DJI, okay, which happens to be currently trading for, and yeah, you guessed it, and one of the reasons I'm talking about it, it once again hit all-time highs today, 25,311. But the more you start to look into this, the more you realize what's really driving the Dow, okay? Well, when you start to think about how the Dow Divisor works, all you have to do is cruise through the Dow stocks and find the highest priced Dow stock to realize what's actually driving the Dow. Because if you look at the Dow in this particular light, like let's go to an underlying and let's pick on an underlying for a second, like GE, okay? Now, GE happens to be none other than an $18 stock. And to kind of script this for you just a little bit, if you looked at GE, which is right here on the screen, and we looked at GE, and GE happens to be, again, this $18 product. Now, that $18 product, it could move up or down, let's say, 4 full points, which is a huge move, right, in an $18 stock. But a 4-point move, okay, then multiply it into the Dow Divisor and so forth, which is equivalent to about 7 Dow points. If GE were to move on a percentage basis, you know, well, $4 is huge. You know, when you start talking about like 20% moves, okay, like a 20% move in the stock only influences the Dow by what? 4 times, you know, about 7 over here. It's somewhere in the neighborhood of about a 28-point move in the Dow, which is what? Fairly negligible, right? A 28-point move in the Dow. But then you start to compare that to underlyings that are kind of the wild childs of the market right now, one of them being Boeing. Now let's cruise over real briefly to a chart specifically on Boeing, because most people are not necessarily familiar. They don't look at Boeing on a day-to-day basis. But you look at Boeing, and Boeing is a $310 product. Once again, hitting all-time highs. And you start to look at Boeing, and Boeing just the other day moved from 296, okay, all the way up to 308. Now, on a percentage basis, that's not like, a huge or just, chaotic move. But for the most part, what is it? It's about $12, okay? So to just take you through some of the math over here, for every 1 point that Boeing moves, that means that the Dow is going to make or lose 7 points. Except it had a 12-point move, so you just take 12 times roughly 7, okay? That one day right there is worth 84 Dow points. Now, just back up for just a second, because all I want to show you here is the influence of one individual product, because right now, Boeing means more than any other product by far and away inside of the Dow. Boeing is recently, and really recently here, since the beginning of ultimately December, moved from roughly, let's call it 260 to 310, right? Or better known as a 50-point move. So the stock itself at a 50-point move times roughly 7 equals, that alone is equivalency of 350 Dow points. Now, in addition to Boeing, let's throw another underlying under the bus over here. Why not talk about Caterpillar for just a second? All right, so we're going to go take a quick glance at a chart on Caterpillar to see also one of the most chaotic moves to the upside. Here we have an underlying, again, just in the last couple of weeks, moving from 140 to 166. Call it what you will. There's another what? It's about dollar movement here, so it's 26 bucks. There's 26 bucks times roughly 7. There's another 182 Dow points. You realize you just add that up, okay, to roughly this, to Boeing, and we're really starting to accumulate, 500-600 Dow points is roughly what just these two underlyings happen to be worth. And again, it doesn't stop there. As you start looking through the Dow, you're going to recognize really quickly that the underlyings that are appreciating have everything to do with the dollar amount. In fact, okay, a little quick slide deck over here, components of the Dow. I just listed a couple of the top components of the Dow. We have Boeing, we have Goldman Sachs, 3M over here, United Healthcare, Home Depot. Hey, wait, take a look at Home Depot there on a chart just really fast here. So quickly glance over at Home Depot. Yeah, Home Depot, what has it done for the markets lately? Well, let's go back here to mid-November to ultimately right now. That's good for another 40 point. Again, that's a 40 point times roughly 7. That's 280 Dow points. It's not going to take you long to realize, okay, what has been gaming the system inside of the Dow are traders that are ultimately pushing the Dow by just what? It doesn't take a huge trader to come in here and a firm to start buying Boeing, to buy Caterpillar there, or to buy, again, only a handful of components of the Dow can actually drive the Dow a little bit higher. But wait, it gets a little bit crazier. That has to do with the Dow, and the Dow, okay, is what? The Dow is a divisor system. Well, it's also going on inside of the S&P 500. What you're looking at right now on your screen, and this curve kind of represents, all right, all the stocks in the S&P 500. So it represents all the stocks in the S&P 500. But what you're going to find out is this is the total weight. This is market cap weighted. What market cap means is the sheer magnitude of the company. What's the biggest company? By far and away, it's Apple. Okay. In fact, I've got that actually listed out here too. It's Apple, Microsoft, Amazon. But, before you go too far, you have to actually recognize Alphabet, which is Google, is broken into two different components over here. If you start adding them up, okay, Google is right there with Microsoft. It's larger than Amazon as well. Nevertheless, kind of back up for just a second in this, all right? What you have here in market cap weighting is very, very interesting. And a lot of people are not focused enough on this kind of stuff in the markets right now. You have the top 20 companies in the S&P 500. That's the entire S&P 500. The top 20 companies are accounting for 30% of the weight. So you think about that. You got 20 companies that are 30%. But wait, it gets much better. Look at the returns lately from Apple, okay, the Microsoft, the Amazon, the Facebook. And Berkshire Hathaway is right there too. If you move Apple, realize that Apple is equivalency to 3.8% in terms of weight. But if you move Apple up, okay, for example, in a percentage gain more than the rest of the S&P, that weighting becomes doubled. For example, if you move the S&Ps up 1%, but Apple appreciates by 2%, okay, it'll actually force the S&Ps up with it in a much higher relative rate. What I'm ultimately saying here, okay, is that you can game the system in the S&P 500 by pushing trades specifically into individual components of the S&P 500. Once you start to kind of get over that hump over here, when you have, again, only 20 companies running 30% of the weight, all you have to do is trade heavily inside of even 10 of those companies to push percentage returns up. How this impacts you, why is this so important? You may have a portfolio right now that's very, very well diversified and performing terribly. Right now, if you don't own the main components, okay, that are really pushing and driving markets higher, okay, then you're not going to receive returns, right, to the marketplace. Meaning that it didn't matter per se that the S&Ps were up 21%. Tons of people didn't perform anywhere near 20% returns last year. And they were well diversified. Diversification is not an effective means. Right now, again, you have a handful of stocks that are driving the markets. Either you own something like the spiders, or you better own components that are really the driving force behind what is moving the markets higher. Consequently, one of the reasons I'm mentioning this today is this leaves markets in possibly the most fragile state that I've ever seen in 20 years. Nobody's ever seen, again, people talk about, different bubbles, and they compare what's going on in the Nasdaq right now, okay, to all the way back to 99 and 2000 time frame. Please, right now is far more fragile. You realize something like, let's give you a quick example here, Boeing. You have to realize what you're in. You look at something like Boeing, and Boeing, for example, has an earnings announcement coming out in just a few weeks. I'm not even going to pick on the tech stocks right now, okay? You go look at Boeing just a few weeks out. It has an expected move of about $17. Do you realize that a $17 move inside of Boeing, okay, and that's coming around the earnings, that, again, a $17 move in terms of the Dow, multiply it times 7, okay, that's 100 and almost 20-point move that you can expect in the Dow exclusively from Boeing. But what happens if Boeing has a wild and woolly day? What happens if we move 3 times what's expected? You look at like 17 and say times 3 over here. Next thing, you're staring down the face of a $50 move in Boeing, multiplied ultimately by 7. That's the equivalency of 350 Dow points, all predicated inside of one underlying. And this is the aspect that not enough people are focused on right now. It's not just about fragile markets. One bad day shatters pretty much hopes and dreams, okay, when you can influence the broader indices by trading only a handful of underlyings. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.